Okay, so the other day, Jake had arguably the worst idea of his career to date. Jake?
Yeah.
What was the video idea?
I think you should let your followers decide what you trade for the week.
Now, I'm sure we've all heard the statistic that says 90% of traders lose 90% of their money within the first 90 days. So pretty much the majority of people don't know how to make money in the markets. So letting my Instagram followers, which are 12,000, non-professional traders, choose what I trade every day for a week, surely that's going to be a disaster, right? But then I had an idea. If the majority of people get the market direction wrong, why don't I let my Instagram followers trade for me for a week, but just do the opposite of whatever they choose? So here's how this is going to work. Each day, I'm going to put a screenshot of a completely bare chart with no technical analysis on it whatsoever. I'm going to put that up on my story with a poll that says buy or sell. And whatever is winning after an hour, I'm going to do that. If buy has come out ahead, I'm just going to go onto that asset. I'm going to trade a one lot and I'm just going to buy. If it goes 5% against me, I'll close the trade. If it goes 5% in profit, I'll close the trade. So that's right, I'm risking 5% each day of the week, 5 days, that's 25%, that's £2,500 risked on this video idea, but all in the name of science. If they say 9 out of 10 traders actually fail to make money in these markets, I'm going to do the comprehensive research and development to work out if it's actually true.
Research and development, putting in the man hours to study the science of what you need.
So with that being said, guys, wish me luck. Let's get on with the video. Now guys, before we proceed with the video, I want to give a very important little announcement here to talk about risk management. Now some of the practices that you're going to see me using in this video are what would be considered bad practices. I've been involved in the financial market since 2015. I've taught people all over the world, thousands of people, including in universities. And one of the biggest problems that we see with people is risk management, whether that be using fixed lot sizes like you're going to see me do in this video, whether that be not using stop losses, using lot sizes too big for their account, or trading based on other people's opinions. These are all very, very bad practices in trading, and so I must stress that this video is simply for fun, it's simply a challenge. Now back in 2015 when I started trading, there wasn't tight regulations around leverage for retail traders, and so even as a novice, I was trading a very high leverage trading account. Now in my professional career, I have a professional account giving me access to high leverage as well. And so I have a lot of experience using margin on trading accounts, so I do know what I'm doing. Now, if you're a newer trader, leverage could be a killer for your trading career because it's going to allow you access to more trading positions and higher lot sizes than you really should be trading for your account. I would always recommend that you trade with 1 or 2% of your account balance per trade position and that you never have more than 2 or 3 on at any one time. I would also stress it is essential in your trading career, as you're learning, that you're always using a stop loss so you know exactly how much you're risking on each trade. Now on top of this, in this video, I'm trading things like gold, things like silver, I'm trading exotics and minor currency pairs that move around a lot, very, very volatile pairs. Again, these are not assets that I would recommend you trade if you are a beginner trader. I would recommend you stick to better known assets such as the euro dollar, such as pound against the dollar, and any of the other US dollar majors. Guys, it's my priority that all of you are staying safe in these markets. A trading career can literally be wiped out in a matter of minutes or a matter of days with just a few bad trades, a few bad decisions. Risk management is absolutely the foundation for trading success. Let's get on with the video. Okay guys, so today is officially the first day of the challenge. It is Monday the 24th of January. So what I'm going to do is I currently have a brand new trading account made with a $10,000 deposit in it, which I'll post on screen right now. And so what I'm going to do, I'm going to head over onto my MetaTrader. I'm simply going to take a screenshot of a chart on gold like so. And then I'm going to go over to my story and I'm just going to post this up with a buy or a sell poll. So that's that posted. I'm going to check back in with you guys in an hour. And remember, whatever my followers have voted for, I'm simply going to do the opposite. So if my followers have voted for buy in an hour's time, I'm going to sell gold one lot. If it goes up 5%, we close. If it goes down 5%, we close. Check back in with you in an hour. Okay guys, so it's been an hour. Let's check in on that story and see what the polls are looking like. Okay, so my followers have voted 71% for sell. So we're simply going to go over onto MetaTrader. We're going to go onto gold here, and we're just going to buy one lot. Oh, this is so stupid. Okay, so we're in our first trade of the week. It's a buy on gold. So check back in with you guys when this is either 5% up or 5% down. So the time has just gone 3 p.m. I was in that trade for a grand total of 1 hour and 20 minutes, and it lost, right?
Impressive. Very nice.
Now the broker that I'm using for this challenge is Blueberry Markets. I've never had an account with them before, but they reached out to me via email, and I thought, you know, what better time to try out a new account than on a challenge where I'm going to lose loads of money, right? Now for those of you who are in the UK, you won't have access to higher leverage accounts. 1 to 30 is pretty much the regulations in the UK. I personally have professional trading accounts, which means I get more leverage, but your average sort of person isn't going to be able to access that leverage in the UK. With Blueberry Markets, they offer 1 to 500 leverage, which means if you have a smaller account and you're trying to trade multiple positions, etc., you're going to be able to do that. On this challenge, because I'm trading one lot positions and it's only a $10,000 account, I am going to need that, you know, that higher leverage, so I've got more margin in case I have multiple positions open at the same time. Now, from what I've experienced so far with the customer service and with the trading conditions and stuff like that, the spreads on Blueberry, it's been absolutely awesome so far. I'm going to try them out obviously for the rest of the week, and if I like them, if I'm happy with the service, I'm going to drop a little link at the top of the description so you can go and create an account with Blueberry as well. So guys, day one, that's going in. So guys, one trade, one loss. I'll catch up with you tomorrow for our next trade. So today is Tuesday and it's the second day of this challenge. Now yesterday was the first trade and we had a loss, right? But I'm feeling confident today. I think today's going to be a good day. Now myself and Alex have just nipped out for coffee, and I'm going to chuck this chart up on my Instagram story right now. So the chart that I'm going with today is going to be pound Aussie. Typically on a day-to-day basis, I would trade mostly majors simply because the spreads are tight and there's pretty much no commissions, so my cost of trade is very, very low. But the thing about majors is they're not that volatile, so they don't really move around a lot, which isn't going to be interesting for this YouTube video. So the asset I'm going with today is going to be pound Aussie. So I'm just going to screenshot that now and get that up on my story. Okay, that's now posted. Myself and Alex are going to head back to the office and I'll check in with you in about an hour to check on the results of this poll. Okay guys, so I'm back at the office now. It's been around about an hour. I'm going to hop over onto my Instagram story and check the results of this poll. Okay, so my followers have voted 57% in favour of sell on pound Aussie. So in accordance with the rules, I'm going to head over onto MetaTrader and I'm going to buy one lot of pound Aussie. Okay, so we're officially long one lot of pound Aussie. I'm going to check back in with you when I'm either $500 richer or $500 poorer. So today is Wednesday. We're officially on day 3 of this game where I just lose all my money. And on the way into work this morning, I put up a chart on dollar against the South African rand. But today, I switched it around a little bit, right? So usually on the Instagram poll, there's like a green option and there's a red option. And the green option usually says buy and the red option usually says sell. But like every day, everyone's just choosing sell. So I thought I would switch them around and see if it changed the result. And we've still got 59% in favour of sell after 1 hour. There we go. Bought. Good morning.
The
Huh?
trigger yesterday.
Still in it.
How's it doing?
It's literally just went sideways the whole time. Why did I do this on FOMC week? I've let the team down. So basically, the FOMC's tonight at 7 PM, right? We have FOMC statement and funds rate and all that good stuff. Typically when there's key event risk like that coming out, the markets won't move for the first half of the week because speculators just sitting on their hands waiting for that news to come out because it's going to be quite directional. Then when the news comes out, you'll get a big move in either direction, and then for the rest of the week, pretty much nothing will happen. So, I didn't choose necessarily a good week to do this challenge. So I'm in 2 trades and all the volatility is going to happen today. I honestly don't know why I bother sometimes. But that's where we're at. Now fast forward to 1 minute until 7 PM, which is when this news actually came out. Now you can see a screen recording here from my phone of my MetaTrader as that news is about to come out. You can see in the top left corner it's 18:59, so we're less than a minute away from the news. Obviously this is my trade on USD against the South African Rand. Now I want you to pay attention to the difference between the bid price here and the ask price here. The bid price being 15,158 and the ask being 15,189. Now as the news comes out, you will see the bid-ask spread go absolutely crazy, the market begin to move super erratically, and then ultimately it takes me out for that 5% loss. Again, so here's the news coming out via my Twitter. Spread, look how much the spread's widened here between the bid and the ask. And then I get spiked out there for that 5% loss. Now you might be wondering why the bid-ask spread actually widens coming into news, and so I thought I'd explain it really quickly for those of you who don't know. And I'm just looking at a video of a price ladder here on the euro. Now the bid line on my chart is grey, so 3 lots are sitting at 11,375 for example. On the ask side, my ask line is yellow, that's represented here. These are the orders at each of these prices on the ask side. So for example, we have 9 lots sitting at 11,367. Now the difference between the nearest buyer and the nearest seller, 11,357 to 11,361, that's a 4-tick spread. I want you to notice how full the order book is. We have orders at every price on either side. Coming into the news, the orders disappear. The order book goes super bare, and look at how much the spread widens. We now have 11,376 to 11,389 between the first buyer and the first seller, right? You're looking at a 12-tick spread there. Huge spread, empty order book. Now why does this happen? Simply coming into key event risk, people don't really know what's going to happen. People are waiting for the news to come out before they trade. So they pull all their orders, liquidity dries up, the market goes super thin, and the spread just has to widen. So that's why your spreads go crazy wide as you come into key event risk and that kind of thing. So it's currently day 4 of the challenge. We've been in 3 trades. We've had 3 losses for a 0% strike rate and $1,500 down. Yeah, I'm starting to think I may have underestimated my followers just a little bit. But anyway, we have to power on. So I'm going to head over onto MetaTrader. I'm going to pick something exotic again. Going to get that up on my story, and I'll check back in with you in an hour when those results are in. So after about an hour, my followers have voted 53% in favour of buy on EuroNOK. So this is the first one where they have voted buy in 4 days. So I'm going to head over onto MetaTrader now, and I'm going to sell 1 lot. I'm going to say buy there. Now guys, over the past 4 trades that I've been in, I've been trading minors and exotics. However, if I just show you the spreads here on Euro-Dollar, which is the most commonly traded FX pair, you can see here on the 1 hour, you can barely even see the spread, right? If I drop down to the 1 minute here, you can only just about see the spread. The spreads on Blueberry for these majors are absolutely razor thin. Well impressed with that. So today is officially day 5 of the challenge, and I have some very good news. So the last trade that I was in was on EuroNOK, and surprisingly overnight, I came in this morning and it was also a loss. So yeah, I'm down $2,000. Today is the last day of the challenge, and I'm feeling hopeful today that by some chance things might turn around a little bit. So what I'm going to do is I think we're going to go with silver today. I'm going to get a chart up on my story, and see what my followers are saying, right? Okay, so after 1 hour, we have 63% in favor of sell on silver. So of course, I'm gonna head over onto MetaTrader now, and I'm gonna buy one lot. And that's it, final trade of the challenge. We are in. We have news coming out, I believe, in about an hour and a half. So I'll check back in with you guys for an update on that trade before the end of the day. Oh. I think it's gonna go. I think it's gonna go. Oh, come on, gold. I'm going to make coffee.
Putin and Macron here.
Oh, wait, hold on. I'm going to need to get rid of that take profit because it looks like it's a bit short.
It says the call's main issue were security proposals.
Come on.
Come on.
Come on.
NATO ignored a key issue.
Yeah, get ready because then it. Yeah. See, it does work. Do the opposite.
It does. So guys, that now brings us to the end of the video and to the conclusion. Now, over the course of the week, I took 5 trades. 4 of them happened to be losers for a total of a 20% loss. And then the last trade on Friday just then happened to be a winner for a 5% gain, meaning all in all, I'm down 15% for the week. So guys, I don't know whether I just underestimated my Instagram followers or whether maybe that statistic isn't true. Maybe the average retail trader is getting a little bit more clued up as the years go on and getting better at calling the market direction, at least on the short term. Now, is this conclusive evidence for those facts? I would say absolutely not. We only had 5 trades and it was only 1 week out of the trading year. If you wanted to come to any kind of reasonable and well-informed trading decision with statistics like this, I would highly recommend that you had a sample size of more than 30 trades and multiple years of data. This is a super small and limited sample size, and again guys, this was just for fun. If you did enjoy this video guys, please drop it a like and consider subscribing if you haven't done already. We're going to do lots more challenges like this over 2022, and I look forward to bringing you along for the ride as well. But as always guys, take care and I'll catch you in the next one.